Welcome investors, Joe here. If you are a breakout trader, then this video is going to be really helpful for you. We all know that buying breakouts is one of the best methods of capturing big moves. But how do we know which breakouts are going to go on to be multi-baggers versus which breakouts are going to fail to thrive and roll over and die? How do we differentiate between, well, the key is institutional versus retail buying. Those pop and drops are retail buyers, whereas the big moves, as you will see, are the institutions coming up to bat, so to speak. So let me show you some. Let's look at our historical precedent, Apple in 2003. And then let me show you Hart Hanks, which I owned until recently. And let's look at H&R Block, which I own right now. We're going to study the breakouts. Let's look at SWAV that I own right now. And then let's look at two that you might be able to play very soon, next week. Maybe SWAV, and then also BJ. And then what is this? If we don't run out of time, let's look at the opposite of what we want to see, courtesy of ARK Innovation, Cathie Wood's famous, infamous ETF. Before we get started, just a reminder that this is not financial advice. This is just for education and entertainment. I've been investing since 1996. I am a Minervini private access member, and I've been studying technical analysis for a long time, but ultimately you need to make your own decisions. So quite simply, with breakouts, what we want to see is the institutions coming in and scooping up shares. And we want to see multiple institutions buying over multiple days. And it's as simple as that. So what this looks like on the chart, let's go, here's Apple in 2003. And here we see kind of a nice shallow base, if you will. Now keep in mind, although O'Neill says you got to buy at the top of the cup here, honestly, in today's investing, you probably have better luck buying the initial cheat, low cheat, or mid cheat, but we need to talk about that later. But in any case, when it clears the majority of the resistance. So here is your resistance line. Pretend I'm drawing a line across there. And here's your breakout. Now what we want to look for is tremendous volume. And we have tremendous volume. See these huge green bars? They might be blue on your chart. And we want to see tremendous volume over multiple days. We want to see a bunch of up days, 3 or 4 in a row. And here we've got 1, 2, 3, 4, 5, 6, 7 up days in a row. And technically we had a down day and then 8, 9. So 8 out of 9 up days in a row by volume was way above average. And those are your proverbial elephants jumping into the pool. Those are institutional buyers gobbling up shares for multiple days. And as you know, when institutions make this decision, they hold often for weeks and months and they continue buying shares. So what happened? Well, you know what happened. We had this tremendous run, as you can see, and Apple was off to the races. All right, let's look at something a little more modern, contemporary, that's the word. Hart Hanks. So here, this is the yearly chart. And here we see a great little shallow base from September 2021 until June 2022. And you've got your classic little cup with handle. Note you don't have to clear all of the supply. Let's see, let me do this. Really, most of the supply is right about here. So you got this nice little cup with handle, and it breaks out of the handle. Now let's look. See how quiet this volume was on the right side of the base? And then look at this high volume buying. That again is institutions, and let's count the number of up days. 1, 2, 3, 4, 5, 6, 7, 8, 9. So you want to see multiple up days, the more the better, on big volume, and then you want to see a natural reaction and then tennis ball action, a tennis ball bounce. So here's a natural reaction. Now this was a big one-day move, but that's not uncommon when you get all of these days in a row, because the retail investors, the short-termers, want to get the heck out of there with their profit. But then we only had this one down day, and then quickly, see how quickly it came up to its all-time high? That is a sign that this stock is gonna make a big move. So what do? Well, you don't know for sure what this breakout is going to end up being like. So you buy the breakout, you use a short stop, and then you watch. And if it extends and if it has strong volume, then you can buy more on this tennis ball action. That's called a pullback buy. When it pulls back and starts to bounce again, you can do a pullback buy, or you can wait for it to do a new all-time high coming off this first reaction. Conversely, if it does a one-day pop and drop, or volume is really anemic and it hardly budges and then starts pulling back into the pattern, then certainly, if you're a long-term investor and you truly believe in the fundamentals, then I suppose you can hold it. But for me, I'll just cut bait, take my 1 or 2% profit or loss, and then I'll watch it from the sidelines, and I can get back in if the chart dictates. Let's look at another one. I've had great success with this one this year, H&R Block. Again, we see a nice shallow handle. This is not shallow base, sorry. One thing that I think a lot of technical investors are hung up with is finding that cup with handle, but it doesn't always have to be a cup. You just want a long multi-week, preferably multi-month congestion zone where shares are getting traded back and forth, and you want it to be pretty shallow like this. That's not a cup with handle, is it? But here you see the breakout, and the market was so weak here that this breakout failed, right? This was a pop and drop. One day up, 1, 2, 3, 4 days down, and sell volume was pretty big. In fact, sell volume on one of these days was bigger than the buy volume. So that was your signal, at least my signal, if we dip back into the pattern, to just sell and wait. And it struggled for a while, but then coming off of earnings in early May, look at this breakout. Huge volume, the biggest volume of the year. Oh, we got a breakout alert. HUM. Should we look at that real quick? Why not? Let's see. This is a healthcare stock. Oops. Can't type. Yeah, sure enough. Here you got a base. You got kind of a cap or high handle, and then a breakout again. Oxy broke out. Sorry, I got distracted there. All right, so we see this huge breakout, huge volume, 1, 2, 3, 4, 5. So this is your signal, and then look, 2 pullback days, barely moved, doji, another pullback buy, barely moved, and boom, tennis ball to the all-time high. This is screaming at you that this is going to make a huge move. So if you want to, you could add shares here, or certainly you're going to want to play this for bigger move by maybe hanging out underneath this 50-day moving average. Unfortunately, you don't know this when this breaks out, right? You would have to buy this breakout and then watch. But this is how you tell. There's no way of knowing. You can kind of guess at the end of the day if buy volume is big on the first day, but you really won't know for a few days. Let's look at SWAV. This is Shockwave Medical. They've got a really innovative medical techniques. They use shock waves. I actually wrote an article about this on Seeking Alpha back in the day. So this is great. Look, here's your classic double bottom base. It's a little deep, but we've been in a bear market, right? You've got a big shakeout in the base. I'd love to see a big shakeout in the base. And here's your cheat buy right here when it clears the hump of the double bottom. And then look at this breakout on earnings. 1, 2, 3, 4, 5 days. huge volume on the additional day, and then it extended. A couple really calm pullback days. It hardly went back, and now it's trying to get to its all-time high. So hopefully you bought the breakout. If not, then you certainly could. I mean, you should have bought it yesterday, but you could even buy this move today. Now, there's probably some sellers here at 300. People like to sell on whole numbers, but you could set your stop down here. That's a little wide, 280 or so. And then when it clears 300, then you could really load up. So let's look at one that is at its breakout point. This is BJ Wholesale. It's kind of an East Coast Costco. There are some differences. Now this is one that I'm hoping to see some extension on the breakout, but we are having a real down day today, which is messing up our price action. So maybe we'll forgive it if it prints a down doji today. So hopefully you're in this thing already. You could have bought this pullback right here, the pullback buy. If not, let's watch and see. We got big volume on the breakout, and we want to see it extend for 2 or 3 or 4 days, big volume up days. If we see that, we're not already in. We want to get in on the first natural reaction. If you are in and we see that, for goodness sake, try to play this thing for a bigger move. Conversely, if this rolls over, fills the gap, starts messing around in the pattern, then that's just a retail pop, and we want to wait for the institutions to show up. So we, at least me, I'm going to sell it and wait for the institutions to show up. Now let's look at one. If you're still with me, hey, if you're still with me, maybe you could consider liking the video and hitting the notification button so you know when I do new video, because I do these pretty sporadically. Now, what I was going to say is let's look at an example of what we don't want to see. Here is ARK Innovation ETF, led by the brilliant Cathie Wood, who refuses to use sell stops on her positions. I don't know why. Let's look at a failed breakout. This is not what we want to see. So we've got a lot of supply over here. We've got a nice right side, and then we have this breakout on a gap, and the volume was decent. But then it extended for just 1 day, didn't get much extension, and then look at this failed natural reaction. Doji 2, that would be your natural reaction, but then look, 3, 4, 5, 6 down days, 1 up day, 1, 2, 3, 4, 5 down days. Now some of you guys, when this happens, you suddenly switch from being a trader to an investor. That's not what you want to do. This is not the institutions jumping into this stock. This is retail investors. They saw Cathie Wood in an interview, they bought it, and the institutions jumped in and took the opportunity to sell. You see, retail investors often buy breakouts, and institutions often use those breakouts to unload their big positions. What we want to see is those rare times when the institutions are joining with the retailers and buying those breakouts. What happened if you held on to this breakout? Well, you were in a world of pain, my friends. Yeah, and that's pretty much it, guys. It's not really a hard concept. You look at those volumes, you look at that extension. Now, if it gets away from you, don't worry. If you didn't get in early, you can buy on that first natural reaction. Let me know what you think of this. Let me know if you use this method. If you've owned any of these stocks, let's talk stocks in the comments below. Take care, everybody.